I have some friends, we're breaking ground by starting at 9 o'clock, and we have a great turnout already, so thank you very much for joining. Let's start with our first panel of the day. So if I can have the panelists join us. So Spyro, Stamatis, if I can have everybody come. We have an amazing event today, tremendous lineup of speakers, and we have a great attendance. So thank you. Whatever you want. You want to be here or you want to be there?
Good morning, everyone, and welcome to the dry bulk panel of this Capital Link forum here at Posidonia. We've got a great panel lined up, but only a short amount of time to talk through the range of issues. No. Okay, well, just give us one. So there's a lot to talk about, but I was lucky enough to be up here 2 years ago as well for the dry bulk panel here at Capital Link. And at that time, the Cape-size 5 TCs was sitting at just over $6,500 a day, having risen from just over $1,000 earlier in the year. And so it was clear 2 years ago at Posidonia that the dry bulk recovery had perhaps started, but what was unclear at the time was what sort of recovery we would see. Now, move forward 2 years to today, and there's a lot more confidence in the market. Expectations are risen, and in the near term, the outlook is fairly positive. But there's obviously a whole range of regulations due to come up into the freight market over the next couple of years, covering bunker sulfur, ballast water, and carbon, and beyond that. So there's a whole range of issues for our panel to discuss. And since it's early, we'll probably start our panel with a nice, easy question, and we'll get their views on how they think the market's progressed since Posidonia 2 years, and what do they see as the outlook and where we are in the market. So perhaps we'll start with you, John. So how do you see the market progressing over the next 12 to 18 months?
Okay, good morning. So the markets, 2018 obviously we've seen it's after a long time that we have a balanced book compared to deliveries versus demand. I mean, the market is obviously getting tighter, and we expect a better utilization of the fleet to lead on to third and fourth quarter. The fleet growth has been about 3% this year versus 3.3 to 3.5% of increase in demand growth, in trade growth of dry bulk cargoes. Of course, Cape-size has shown extreme volatility, as we've seen, especially in the recent month. And we've seen the indices, especially, as I said, in the last month or two, have basically been driven by the Cape. So you've had all the markets being stable, whereas the Cape-size is volatile, sometimes increasing a lot, 10, 15%, and other times correcting. The Atlantic recently has been quite subdued due to some hiccups. We all hear about tariffs on soybeans, now again on alumina and some steel that affect the Atlantic market. Of course, sanctions that were by the US against Russia have also affected the market in the short term. But generally, my view is that the order book currently is standing at around 10% of the fleet. Even less, looks even better for the smaller to medium-sized segment, standing at 6.7%. And the fact that we have a general very good GDP growth continuing in the next couple of years, I think the outlook is pretty good. I think the cycle will peak at around 2019, and then moving sideways after 2020, where we have more vessels being delivered at about 45 million tons of deadweight, whereas 2019 is around 38 million, which is looking a little bit, you know, it's starting to increase a little bit with all the tier 2 vessels coming in the market. So overall, fairly positive, but I think prices do not have a huge upside to go still, and I think the trading band will be relatively limited. So we're going to see, I don't expect we're going to see a huge increase in charter rates. Of course, not talking about Capesize. I mean, you know, we are more a Supramax, Panamax player, Kamsarmax, and I think the trading band will be limited. Cape has, I think, has a different dynamic on its own.
Thank you. So perhaps if we get a Cape-size view from Stamatis, do you see a peak in 2019 as well, or do you see a cycle extending beyond that?
Well, we are generally very optimistic about the Cape-size sector, and I'm sure that my fellow speakers will agree to that. We stand into this historical combination of demand and supply fundamentals. We don't really see any slowdown as far as the Chinese demand is concerned, and we also stand in this historical moment in time that the Cape-size order book stands at the, close to the all-time low. So on that respect, I don't really see any reason why the market is not going to soar in the next, few years. Obviously, that was kind of scheduled to start happening already, but due to weather-related incidents starting from Brazil, we didn't see that happening. We're very bullish and optimistic. We think that this is going to turn very positive, starting in the second half of 18 and onwards. And we can discuss more about fundamentals of supply of ships and other factors affecting, the ton-mile demand later in this panel.
Brilliant. So maybe for you, Philippe, if we expect the market to continue to cycle upwards over the next couple of years, how are you addressing that? Are you changing your operating strategy? Are you changing the way you run your business to take advantage of that cycle?
Do this. You want to stay spot right now. You have a fantastic outlook. You've got coal demand from India and a lot of Southeast Asian countries. You've got increasing steel demand from the same people. With that, you have lengthening trade routes and you have a manageable fleet supply, right? So all your stars are aligning. You want to keep your ships very close, and every single cargo you fix, you should be grabbing every cent out of it, because this is the time. The next 18 months, you can't put any more ships than we can see in the market, and cargo demand looks very strong.
So would anyone else on the panel like to comment on that? Philippe, perhaps?
Would you like to comment on that?
I don't have anything to add to what has been said. In our group, we are reasonably optimistic for at least the 2 years to come. So there seems to be a consensus about that. And consensus is sometimes are rather dangerous, but let's hope this time they will prove efficient. No, we've been coming out of a crisis which I think by far I'm the oldest on the panel. Even though my company is 170 years old, we've been through very difficult crises over the last 170 years, especially the last 6-7 years. I don't think ever we had such a crisis, and now that we're recovering thanks to reasonable practices of ship owners who've been scrapping some ships and not ordering too much after this awful speculation years. Let's hope that we will not see that again happening. Not too much speculation, not too much financiers getting into this market that they regularly do and definitely did a lot over the last years, which increased obviously the oversupply. So we are reasonably optimistic, and we've bought a lot of ships in the last 18 months to yards directly, and we are quite happy with that and feel confident.
Excellent.
Can I add one thing about the financial money coming in? I agree. Last time it came in, it went into new capacity. This time when it comes in, it's our job not to direct it to new capacity. New capital can be good for the market if it's guided in the right way. And if someone wants to make a bet on dry bulk, there's enough existing ships out there for them to buy.
So perhaps on that point, Spyros,
Absolutely.
what's your approach, Spyros? How are you approaching the market and your strategy to deal with the cycle?
I also agree with the gentleman before. It seems that the fundamentals are there for a much better dry bulk market. But unfortunately, past experience has shown us that the shipping world is the less disciplined world. And the moment that they see that things look very good, they all go out, speculatively or not, and they put orders. So this is the biggest risk going forward. I think, and I hope that John Michael is right, that people will not put order this time, that there's plenty of second-hand out there.
I'm not.
And that at the end we'll enjoy the good years that all panelists have said before. Probably it's not going to last as long as we hope, but let it work.
Okay. And just to follow up on that.
Sorry, James, if I may touch upon Spyros' last point. I generally agree that people get greedy and there's not so much discipline, especially on the dry bulk side. However, what we have seen so far is that on the Capesize segment, there's been quite a very strong discipline. From now until 2021, there are very, very few orders. The order book is literally one of the smallest in history, and there is no availability of new building slots. So even if someone wanted to place an order for a Capesize today, from now until the end of 2020, beginning of 2021, there's no more than 20 or 25 slots available. That is a market that used to deliver about 100 ships a year consistently. And right now, from now until 2021, you have altogether 20, 25 ships. That's it. So have that in mind, because even if you wanted to do that, you can't.
You're right, Stamatis, because looking at the statistics, 5 years ago, or 3 years ago actually, December 2015, the order book for the dry bulk was over 20%. And now it's the first time that we see the order book being below 10%.
Exactly right.
Good news.
Okay. So perhaps if the Capesize looks quite tight, does anyone have a view on some of the other sectors, or is there a view on the benefit of being diversified across sectors rather than a pure Cape play? Perhaps Philippe?
Now, we've been in Capesize business for a long time, and now we believe that it's time to slowly, reasonably get out. I don't believe Capesize is any more a business for, let's put it that way, medium-sized or family or independent companies. More and more we will be getting squeezed between the big deciders, the big storytellers. Would they be miners? Would they be importers? Would they be steelworks? So we still own 5 or 7 Capesize, but slowly we'll be getting out of that market and concentrating on smaller sizes. I believe Capesize has been a very dangerous. It's getting more and more dangerous. You can lose a lot of money, and you will not make a lot of money unless you speculate a lot. But this is not how you keep in business for a long time.
Respectfully, I would disagree with Mr. Louis-Dreyfus.
I wouldn't expect anything different from you.
I think Capesize
That's why we charter ships.
That's right. we own ships, but I agree. Capesizes are a very risky play, and the way you protect yourself with a Capesize is with your balance sheet. You've got to have an ironclad balance sheet and very low leverage, because the swings are super volatile, super vicious, whatever you want to call them, but they can work very well in your favor, they can work against you, but you've got to be able to get there when they work very well in your favor, and the only way you do that is keeping your costs down. The best way to keep your costs down is low leverage.
And being the largest dry bulk company in the public markets, we cannot afford not to be present both in the Capes market as well as in the Kamsarmax, Ultramax, Supramax markets. I think the one gives you bigger potential but more volatile. We depend a lot on China, on the Capes, but also we like the Capes very much. On the other hand, Kamsarmaxes, Supramaxes are less volatile. They give you a stable revenue, but on the other hand, there the returns cannot be as big, or the losses cannot be as big as what we experience on the Capesize market.
So, John, do you believe the same, the use of smaller ships as a hedge against the volatility of the Capesizes?
Yeah, I mean, we're more involved in the modern large handies and supras and ultras. I mean, we've seen in the 2016-15, I mean, Supramax were actually outperforming even on absolute terms other asset classes. But, I mean, definitely, I mean, volatility is less, hence downside and upside potential is less. I mean, having said that, it's interesting that, I mean, compared to, I have a couple of notes. I remember the Supramax prices since the lowest of 16. I mean, take the resale, for example, has gone up 44%. The 5-year ship has gone up 50%, and then 10-year-old ship has gone up 142%, compared again to 2016, let's say February, March. Similar for handy, of course, handy has been more defensive play, where you've had the maximum on a 10-year-old ship. You have gained 82% by buying a handy back then. I imagine for a Capesize or a Kamsarmax, I mean, the numbers must be even more impressive.
I mean,
because of the volatility.
Yeah, I think my theory is in a super cyclical business like shipping, you don't really want to be defensive. You want to be aggressive. You want to be in the ship type that makes the most money when the tide turns, right? In bad times, it's bad, right? You're not going to be being less bad doesn't really help you, but in good times you want to get the most money you possibly can, and for me that's the Capesizes. Those are the ships, we've already seen it this year, they've gone from 8,000 to 20,000, and it looks like might go back to 20,000. So you can really make a lot of money very quickly, and by definition that's what you're supposed to do in a super cyclical business.
Yeah, I mean that's true, and of course the opinion that you need, of course, a sizable fleet on Capes, to make a good play. That's
also very true.
Very fair point. But generally, for me, I like to have versatility in terms of cargoes. I prefer to play in various. Of course, coal, iron ore, but then also other minor bulk cargoes tend to be also quite stable. I mean, I understand that if you want to go for the big bucks, you have to be good at Cape. Yeah. So I accept that.
I'm not against personally in my company to make a lot of money immediately, but much more favor making less money a long time and not losing too much than making a lot and losing a lot also. Which prove when you have a Capesize chartered out to a very large, I wouldn't give any names, a current company or Indian company, and they go just Title 11 and don't pay you for the rest of the 12 years to come your charter. It's a really big disappointment.
That's why it's nice to fix to you for the time being.
Thank you.
If we look slightly further ahead, when we get to 2020, we've obviously got all these new regulations coming in on bunker sulfur. How do you see that affecting the market? Let's perhaps start again with Stamatis on the Capesizes.
Well, I think that 2020 and the enforcement of Annex 6 is going to be one of the best things happened in shipping for the last 20 years. And I will tell you why. On our ships, on the Capesizes, at let's say 10 knots, we consume about 30 tons a day. At 12.5, we consume 47.5. Once the spread and the gap between the MGO and HFO, as it is expected, widens, the natural reaction of all the ship owners is to slow down. If the fleet slows down by 20%, which in my opinion is the most probable scenario, that means that about 300 to 400 Capes will have exited the market. This has never happened historically, at least for the last 15 years. If that happens, we're talking about a market that's going to exceed $50,000 a day. So I'm very optimistic about 2020. We don't see the scrubber market picking up as many people wanted to believe. Certainly, I don't really see more than 5% of the global Capesize fleet to have the scrubbers retrofitted. So the only choice at that time is to burn MGO. So if you burn the MGO at this kind of levels, you will need to slow down, unless, of course, the market goes crazy, which, in any case is good for us. But certainly, 20% slower speed means 400 ships out of service. And that's one of the best things happening in shipping for a long, long time.
May I, sorry again, but I agree totally with that. I've been very much in favor, when I was president of BIMCO, of reducing speed for all shipping globally, internationally, for all ships, depending on what type of ships. But it's, by the way, quite good for the market, as you just said, but it's also quite good for the environment. It's amazing how much fuel you save just for Capesize going down from 12.5 to 11 knots. And no one needs to get your iron ore one day earlier or later. So really it's a big effort we can all do, we shipowners, to accept the idea of reducing speed. Good for the environment and good for market.
100%.
100%.
So slow your ships down, everyone, seems to be.
Let's do it.
Yep. Slow down.
However, may I say something? When everybody agrees, there's always a catch there. I think that at least that's what we're doing. We're examining also the possibility of installing scrubbers on our vessels. For the time being, we're doing it for 2 Newcastle Maxes. We want to see the results from that. I know it's a painful exercise. It's an exercise that will cost money, but we will examine that and we'll see what the results are going to be. And if the results are positive, I wouldn't exclude that we install scrubbers on all our big vessels.
John, perhaps on the Supras and Handies, where the dynamics are slightly different from the Capes and the fuel consumption is lower, how are you approaching the 2020 low sulfur issues?
Yeah, I mean, I don't see us going there, especially for these modern Handies or modern Ultras. I mean, the consumptions are pretty low, and of course you have less time at sea. So obviously the payback is quicker. I think the scrubber is a 2-3 year play, where the delta versus the two kinds of fuels are going to be the highest. So I don't see it happening there. Also, let's not forget if you work a lot in SECA areas, you probably need to install a hybrid scrubber, which is a much more complicated situation, much more expensive, operationally problem. You need urea, you need then to dispose of your sulfur that's collected in your tanks. So it's a much more complicated solution. So we don't see it for especially for modern eco vessels, for Handies and Ultras. I think it's for larger vessels, maybe Kamsarmaxes, or for sure Capes, but maybe even their opinions differ, I think.
John Michael, do you have any views?
No, we're going to do what 95% of the fleet is going to do, and not install scrubbers, not for the time being, and install ballast water treatment. This is in 2020, what everyone forgets is it's the first time in my career we've seen a new regulation come in that, by definition, we all comply with.
And does the panel agree that compliance will be high, or do you think there'll be pockets of resistance in areas where there's a level of non-compliance?
If I knew that, my helicopter would be waiting for me on the roof. It's difficult to tell, right, what's going to happen with fuel price for me.
Yeah, and also don't forget that if you have a long view about the spread between the MGO and the HFO, instead of going out and putting scrubbers on all the ships, you can always buy a swap. There are so many available financial instruments. So if everybody's convinced that the spread between the MGO and the HFO is going to go to $1,000 or whatever, you just go out and buy a swap. There's no need for a few thousand tons. There's no need to spend $3 million on installing a scrubber. You can always buy an instrument. So, if everybody's so convinced, why don't you buy the swap?
And like we said before, we can slow down.
Yeah. Yes, it's better.
I'm really happy to see that there's a big consensus again on the idea of reducing speed, because I've tried to promote that idea for years and with not much success, really. I'm very happy to see people agreeing. Now we have to do it because it's good for the market and good for the environment. If we had not been dragging, we ship owners, dragging our feet on environment issues so long in the last 5-6 years, we wouldn't have these regulations imposed on us, which are not very satisfactory. So at least we can work something out ourselves, reducing speed, which is a good approach to all these important issues, and good for the market, which is not...
Absolutely. It makes sense financially, operationally, and environmentally.
The other major piece of legislation that's coming in, of course, is the ballast water treatment. Spyros, perhaps, do you have any thoughts? Is this going to be an impediment to any form of trade, or is it something that the shipping fleet will just absorb and get over and move onwards?
Well, all these regulations, the end result of those is that it increases the cost of doing business for us. And of course, we'll conform to all these regulations, and we'll put ballast water treatment systems. We have already done it, and we'll do it going forward. And that's it. I think the whole industry will do that. But as we were saying before, it's reducing speed is the most environmental friendly thing to do. And I think it's so strange that for so many years, governments, IMO organizations do not focus on that, because this is the only sure way to reduce pollution.
100%. It's an easy fix. And here's the other thing that bothers me about all the IMO and all the talks about the ballast water treatment. We lost 26 people this year because of structural problems on a ship. And I still haven't heard any concentration about that. And another one of these things just went out, the lights went out on it. So maybe we should concentrate on the safety of the ships at sea before we worry about ballast water treatment, which will take care of itself.
Thank you, John Mike. That's an excellent point. On the looking at threats to the market, in the discussions I have, particularly on the Capesize sector, one of the biggest issues that's raised is the impact of the Valemax vessels and the dedicated fleet of iron ore carriers. At the moment, there's around 88 of these vessels on the water. By the end of 2021, we expect there to be nearly 160. What impact on the market, and I guess specifically the Capesize market, do we expect these ships to have? And what's going to happen to those capes that are displaced?
It's not going to be positive, right? But here's the thing. There's 51, call it vlogs coming before now in 2020, and there's also 51 vlogs that are over 20 years old. So you have a lot of replacement there. But I'll say this about Capesizes in general, is they do more than carry iron ore from Brazil to China. And one of the big reasons why we've had such a good market in the first half of the year, or for me the biggest, because the iron ore has not done what we expected it to, is emerging coal trades, especially into India and other places in Southeast Asia, and Valemaxes don't carry cargo for those trades.
Another point is that out of the 12 or 13 total docks in the Brazilian iron ore ports, only 2 or even 3 are suitable to do the Valemaxes. So it has a natural limitation, and like Vale has told us many, many times, the new Valemax order is merely there to replace the existing conversions, like John Michael said. So we don't really see that as a threat. There's very strong structural problems. We need to see some of these old converted ships get out of the market, and we need the regulation instead of, like you very well said before, John Michael, instead of trying to enforce things that are, correcting by themselves, to push the older tonnage out, especially these dangerous things.
Philippe, you mentioned earlier you were concerned about the future of the Capesize market. Is this what you were referring to when you were talking about the structure of the business? The incoming ore carriers?
Yes, for you.
Sorry, I didn't get clear your question because I've got an ear for me and the sound is not that good from you to us. Oh, wait, at least me.
Yeah, you mentioned earlier about your approach to the Cape-sized market and how you saw it changing structurally. Are these very large ore carriers part of your concern behind that?
Sorry.
Do you think the Valley Maxes are a big concern to the Cape size?
Oh yeah, it is, but that's what I was sorry to be so deaf, I must say, which happens when you're a ship owner, by the way.
Yes.
It is a concern because it's exactly what I said earlier. More and more these activities will be reserved to very few companies with very special links to the major users. If not the users themselves, would they be miners? Would they be even countries themselves, like China? So this is one of the reasons we believe that we should slowly get out, I say slowly, get out of that Cape-size market, where, especially because we believe the market will be good for the years to come. And we don't want to sell when we hear the gun. We like to sell when we hear the violence. So I guess we'll get out of it slowly. And this is, I guess, this time I was able to answer your question.
Yeah, but since we're actually talking about supply, since the beginning of 2017, so for the last, let's say, 16, 17 months, we have seen 203 new building orders for Kamsarmaxes and Panamaxes, and 100 new orders for Ultramaxes, while at the same time, the orders for, Capes of all sorts has been, totally zero. So you have 305 new building orders since the beginning of 2017, and 0 new orders for Cape sizes, just to give you an idea of, how the supply fundamentals are running up.
On the supply side, the bad news is that with a good market, fewer vessels go for demolition. And of course, that does not reduce the number of vessels in the market. However, the new regulations starting of 2020 will oblige some of the ship owners to do their own proper accounting and to see whether it's worth doing investments in ballast water treatment systems, in putting scrubbers, or in order to remain competitive with the rest of the market. And I think at that time, even though the market will be better, people will be obliged to take the decision to go at the demolition yard.
Sorry, one comment. I mean, my take on this, especially another dimension, has to do, of course, with the leasing house as well, that support all this program, especially the very large or carrier programs. I mean, they're very supported by leasing house, which is an indirect support from, of course, from the Chinese government. You could argue, through the banks. I mean, we have also seen some speculative orders from leasing houses, but they're quite not very extensive. I mean, on Ultramaxes and some Kamsarmax in China, we have seen that without even a dedicated, let's say, operator, ship owner. So it's directly from the leasing house. At least on the very large carriers, you have a dedicated cargo program. You know exactly where the ship is going. So that's at least more interesting. And so I see, obviously, there is more support for the supply side. And as far as the shipyard supply is concerned, I have seen that basically many of the shipyards that we were expecting would be out of business in China. We have seen also in South Korea some of them. I mean, we have ordered actually some vessels in STX where people thought, STX wouldn't be there, but they are there. So yes, these shipyards are not going to produce capes, but they're taking away, let's say, the job of producing Ultras and Kamsarmax and other ships and letting the big yards produce more capes. So the shipyard capacity is not going away as fast as some people thought. I mean, I hear even now talk that maybe Sino-Pacific may be, Sino-Pacific 2.0, So you see, shipyards are, as long as they're there may be some financial investor to come to reboot the balance sheet. So
he can buy a second-hand ship.
Yeah, of
There's
course.
no gun to your head
That's
to
much
order a
better.
new ship just because the capacity is there to be able to do so.
Right. Thank you, gentlemen. I think we're out of time now, but thank you very much for your comments, and thank you for this panel session.
Thank you very much.